So, credit score. You want to know what's the fastest way to increase your credit if you're starting? Or even if you're not starting to? Then stick around till the end and I'll show you what's the fastest way. What's up guys, welcome to my channel. And in this channel you're going to be seeing everything related to personal finance, credit scores, business credit, entrepreneurship, and how to grow your money. Today we're going to be talking about credit scores. What are they and why do we need one? So this is just a way for us to be able to transact in an economic way with everything that we do. So usually you have a buyer and a seller, right? And they need a way to exchange either a good or a service, whatever they're offering, and then you're offering something in return. And that usually it was currency, but in today's world we actually do it with credit. In order to have credit, you need to have a lending institution that provides that credit to you. And that lending institution bases the product that they offer to you based on some type of credit worthiness score. And this is what the credit score is. Ultimately, this helps our economy grow. But this score has to be based on something. So what is it based on? It is based on your data. That's right. Your data is sent to some institutions. These institutions are what they call the credit bureaus. So the credit bureaus use this information, your data, and they put it into a formula. And this formula is calculated that gives out the number. And that number is your credit score. Before they do any of that, they have to verify that there's no one newer than you. Thank you, Dr. Sois. But really, this is what they use, what it's called PII, personally identifiable information. So this information is obviously not to be shared. This is things like your social security number, your name, your addresses, and sometimes they even use what type of loans you had before, and sometimes they use what type of cars you had before. Everything in an effort to identify you. Now, all of this information is not used to calculate your score. Like I said, this is just to make sure that you're the one seeing this information. And if you're interested in getting your credit report, you can do that at the annualcreditreport.com, and I'll leave a link below. So as a one pro tip, you always verify that all the information in that report belongs to you. So check for things like accounts, number of accounts, balances, everything that is related to that account. You have to know where its origination is. If you don't, then it's not yours. Then there's a mistake, and then you can report those mistakes to the credit bureaus. Why is this important? The credit bureaus, all of them, even though it's the same data, all of them report differently. So this is why you have different credit scores. The most known credit reporting bureaus are Experian, TransUnion, and Equifax. But did you know that there's over 40 of them? This is just the top 3. Like any other industry, you have a lot of companies competing to be the top. This is the top 3. And some lending companies actually utilize these other companies that are not the top 3. For example, there's another one called Innovis. There's another one called SageStream, and another one called Pre-Employ. So some of these do not have credit scores. The majority of them do not have credit scores, but they're used for specific niches. So for example, Pre-Employ is for employment data. There's another one called LexisNexis, which is a big company, but they have something called Clue Auto. That one is for auto insurance history. So you see, like, some of them are very specific. So different companies, they try to use whichever bureau offers that data. There's a key part here. Obtaining that data for the lending institution costs money. So they decide which bureau they will use. Obviously, if they use the top 3, it may be more expensive for them. If you're interested in learning more about all of these other credit bureaus, I'm going to leave a list down below so that you can go check them out. And you will see that some of them are actually familiar to you because they have one for rental history, they have one for background checks, they have other ones for real estate mortgages. It's very interesting which credit bureau is going to be used in different scenarios. So the bureaus need a specific standard way to classify us. This is where the need with a standard way of actually scoring some type of way right, using a formula. This formula is known as the FICO score, not to be confused with the Vantage score. We'll talk about that in a little bit. So if you didn't know, FICO is actually a company. They are traded in the New York Stock Exchange. Their stock symbol is FICO, F-I-C-O, literally. It's a data company that actually helps all of us just analyze the data in order to create the most valuable formula for determining our credit worthiness to lenders. So what's in that score? What's in that formula? Interesting, right? It gets funky here. So let's see. So FICO, it's the formula, but it has different industries. It has auto, it has real estate, it has revolving credit, which is what they call bank card, and each one of those industries get to use a version of this formula. So right now we are on version 9. I think it's getting to be mostly widely available, FICO 9, even though we're still using a lot of FICO 8. But for each industry, they have specific ones that they use. For example, if you're getting an auto loan, they will look at the auto score, which for Experian, they will be using FICO 8 or FICO 2. For Equifax, they will be using FICO 8 or FICO 5. And for TransUnion, they will be using FICO 8 and FICO 4. Where it varies a little, even though the different versions actually do not vary that much, but where it varies a little is for mortgages. So for mortgages, Experian is going to be, let me make sure, got my cheat sheet here. For Experian, they're going to be using FICO 2. For Equifax, they're going to be using FICO 5, and for TransUnion, they're going to be using FICO 4. And these are just 3. There's many other industries. There you have department stores. So whenever you go to Macy's and get a credit card, that's a different type of credit score that they look at it, or different. They may be the same version. All of that, it's included in the myfico.com website. I'll include the link down below so that you can check it out in case you're interested in knowing what's your credit score. Specifically for mortgages, the lending company will create what they call residential mortgage credit report. This is that they, like I said, they use in the different bureaus, and they use different formulas. Sometimes those vary a little, right? And for some lending companies that are giving you a mortgage, they will look at other things too as well. They will capture all of that and then create a report for your case. So what are the parts of this formula? The parts of the formula are divided into 5 main parts. You have payment history, outstanding debt, credit history length, new credit, and credit mix. These different parts have different percentages. So for example, the payment history is the one with the highest percentage, which is 35%, which means that you paying on time is the most important factor for your credit score, your FICO credit score. Then the second one will be outstanding debt with 30%. Then you have credit history length with 15%, the pursuit of new credit with 10%, and the credit mix with 10%. Credit history length is just how long you have been having credit. The pursuit of new credit is how many accounts have you opened in the last 6 to 12 months, and then keep it in your report up to 24 months, that's 2 years. And the credit mix is the different type of credit. So you're talking about revolving balance, which is credit cards and department store cards, lines of credit too. You're talking about residential mortgages, right? You're talking about commercial mortgages. That's in the business side, and I'll make another video about that part later on. And credit mix, you also have personal loans and things like that as well. Why do they have different versions of the score, of the FICO score? Because times change and the lending institutions sort of need more information about us. They have to readjust the weight on the things that they consider important. For example, FICO version 8 now in the credit utilization part used to be 20 to 25, now it's 30, even more important than before. So for things that are new, like in the FICO 9, the version 9, third-party collections won't really affect as much as they do now. Also, medical bills won't affect as much as they do now. And finally, rental history will play a role. Right now, rental history does not play a role in any of the credit bureaus, unless you're looking at a specific bureau that does that. And I'll do have those in the description down below. Like I said, getting the FICO FICO score costs money for the company. So whenever a company offers you free FICO score, that's very important. Notice, free FICO score. This is a service that costs them money, that they are showing you exactly what they are looking at. Who does this? Well, there's a credit card company that does it. That is Discover. They actually share the FICO score. But obviously you're not going to be paying to getting a close look at your credit score. You can, yeah, and it's good to get your report. You get a free copy every year at the minimum, and the score is what the banks look at. But there's another score that is totally free. And this is the one that you're probably more used to, but you haven't really paid attention. This is called the Vantage score. Like the FICO score, the Vantage score has many versions. And this is what you see when you look at companies like Credit Karma. Also, some credit card companies offer you the credit score. And this is part of that Chase Credit Journey. This is something that American Express also offers for free, and Capital One and many other companies offer your Vantage score for free. One of the main differences between FICO and Vantage is that Vantage penalizes late payments on mortgages a bit more harsher than FICO. And like I said, depending on the version, they adjust the weights. And this happens with Vantage too. For example, Vantage Score 4.0 is the new one, where their formula is not based on 5 topics, but actually based on 6. And the highest weight is given to payment history with 41%. As you can see, the depth of credit and the credit utilization, it's at 20%. Then you have recent credit at 11%, balances at 6%, and available credit at 2%. Now that you know all of this, the real question is, how do you increase your credit score fast? So as you can see, the formula is determined by multiple factors. A lot of those factors you can control by being diligent on paying your debt on time. But there's one factor that is actually not easy to control. There's a way to control it, but that's not easy to control, and that is time. When you're starting up, either you're a youngster or you came from a different country here, or you've never had credit before, you're starting from zero. How do you leverage time? It's hard. So here's a little tip that you can do. There's different ways, and I'll start with the easiest one. The easiest one is self-reporting. Self-report your rent payments, your utilities payment, all of that to the bureaus, so that they know that you actually paid your bills on time. That actually matters. There are companies that do this for free, and there are other companies that don't. So if you're already paying rent through a portal, through some type of system, ask them if they actually report to the bureaus. If they don't, then here's a list of the places you can look at. Don't worry, I'll put it in the description below as well. So let's talk about other types of things you can report, like your phone bills. Experian have this product called Experian Boost. You can use this to self-report your utility and your phone bills. This actually helps. And then there's 2 more other interesting things that are happening. FICO has created a product called Ultra FICO. This product allows them to take in consideration your bank balances. So if you're a person that doesn't use credit at all but have high balances, this can actually help you, because they can take that into consideration when doing your credit score. There is a new initiative too. This is the second one, called PRBC. PRBC is just an alternative credit score, which is based on the bills you pay. I'm going to leave the link down below so that you can check it out as well. Ultimately, time cannot be controlled with those either, but here's a way you can do it. If you're starting, or if you need to get better at credit, raise your credit, and that is become an authorized user. What is an authorized user? An authorized user is when somebody else that has good credit, that's the key, adds you to their account. So you will get a credit card with your name and a little piece of credit attached to it, but the history will go under your credit report. This increases your credit score. It does help a lot, especially when you're starting and you have some type of bad credit. Now, lenders can see sometimes whether you're an authorized user in a certain account or not, and then they may take that into consideration. So this is not a long-term technique. This is just to get you started, to get you to that score that you need in order to get your own credit line, your own credit card, your own loans. It's just a way to help you get out of the gate. need. So you can use a friend, an uncle, a mom, dad, grandpa, grandma, anybody. Obviously, you have to make sure that they have good credit. And if they, for some reason, say, how can I trust you? Simple as, you give them the card that's sent to you or destroy it so you don't have access to that line, but it's still reporting in your report. So you gain the benefit and there's no risk for the person allowing you to use. If you find this video really valuable, give it a thumbs up, man. Smash it. And subscribe to my channel, please. It really helps me out, and I will continue giving you the best content I can. If you are interested in anything else that you want to listen to, let me know down below. Honestly, just be responsible. This is a channel where we're going to be teaching you about financial responsibility, personal finance, and how to grow your money. And one of them is to make sure that you use credit, but in the smart way. So thank you for watching. This is all. I really appreciate you staying until the end. And if you did, just please smash that like button and subscribe. Thank you so much. It really helps me out. And I'll leave you with something interesting. So on the other side of the spectrum, there's the companies that give you credit and then have to report that to the credit bureaus. That is called data furnishing. And if you're interested in that, let me know down below and I'll make a video about it. See ya.